Hi there, Sean Kevelighan again with another Triplel-I Executive Exchange. Very excited for our guest today, really in the heat of a big issue that we are focused on at Triplel-I as well, litigation or legal system abuse. Joining me is Adam Blinick. He is Senior Director of Public Policy and Communications at Uber. Uber has been very engaged as well on this issue. Adam, welcome.
Thanks for having me, Sean.
Hey, so Adam, let's talk first about just, where we're at with legal system abuse and really how you see, trends that are happening in what I call the big business of US law, whether it's advertising or litigation financing. How are these affecting your operations at Uber?
Yeah, so just to start, Sean, I think it's important by level setting by saying that we, as Uber, carry $1 million of third-party liability in all states across the country, a minimum of that amount. And I think it's important to note that we don't actually advocate for lowering that amount. We think it's really important that there be insurance in place to protect those that are on the road and using our product. What we don't think that should be is an invitation for legal abuse and for the trial bar to get inventive about different ways to artificially increase the value of claims. And so we see various ways in which this is manifesting across our insurance lines. I think you touched on some of the things that we do see. We see very aggressive advertising. If anyone were to land at LAX in Los Angeles, you'll see billboards where people are self-proclaimed Uber attorneys. We know of these connections between attorneys and various medical providers, some very hard to track but increasingly visible evidence of third-party lenders that are playing across all elements of a claim. But beyond that, we think that there's even something more potentially opaque and nefarious happening. There has been recent survey work done by an organization that we very much support, Protecting American Consumers Together, that shows that something like over 90% of individuals who have retained a plaintiff said that the outreach actually came from an attorney or someone in their network to the actual victim themselves. Almost 60%, I believe, said that they actually received outreach by more than one attorney. And equally to that trend, we see that much of that outreach is happening within a week of the incident itself. So this is before insurance can actually even play a part in actually addressing someone's concerns or trying to address a problem. We see that the litigation apparatus is kicked into high gear, and this creates just more representation rates and, as I'm sure we'll discuss, more avenues for people to push people into these mills and artificially inflate the value of claims themselves. The cost of insurance for us is the second highest operating cost after actually what is the payment to drivers. But it's very uneven in terms of how it's felt across markets. So in certain states, we have what's called UM/UIM. I'm sure that'll be a familiar concept to your audience, but this is uninsured, underinsured requirements. Oftentimes in most markets, we are the only entity or the only industry required to carry it, especially at rates we're talking at sometimes about 400,000, a million, 1.25 million, 1.5 million per incident. And that just creates really skewed ways in which insurance flows through to the customer. So for example, we recently had some reform in California, but before that reform took place, in Los Angeles County, 45% of the Uber rider fare was going towards insurance.
These are things we're talking about all the time, but those percentages of just how much you need to apply of insurance into the overall operational cost is extraordinary. There's another issue as well that I know Uber has been even taken legal action on, and this is around staged accidents. What we consider hard fraud. This isn't just inflating legitimate claims. This is creating claims through fraudulent acts. What have you learned about this in terms of how organized fraud or abuse of the legal system operates in the rideshare ecosystem?
Yeah, maybe even to take a step back, I think it's important that you labeled it right, hard fraud, but I do think it's worth actually speaking a little bit about soft fraud because they really do exist on a continuum, and in some ways, some of our legal actions in this regard speak to that continuum. So when we speak of soft fraud, What we are referring to are individuals who have actually been in an incident. And kind of as I spoke to before, either they've been reached out to or they reach out to an attorney. And then really without being sophisticated in terms of how their scheme works, they find themselves navigating this network of lenders and medical providers, and unbeknownst to them, necessarily taking on exceptional risk, both in terms of physical risk. They're being pushed and encouraged into procedures that are otherwise inadvisable and frankly, oftentimes leave them in more pain than they were otherwise. And then also financial risk, both in terms of getting work done on a lien basis by medical providers. And this is oftentimes when the person actually does have health insurance in play and does not need to take any exposure in that regard. But instead, they're getting procedures done that are done under exaggerated costs. But these liens are effectively medical debt. This is something that the person then owes to the medical provider and has to often be negotiated out upon settlement. And then also other kind of financial debt or exposure via third-party lenders. Sometimes these third-party lenders, and this is reported on, have direct connections, either affiliations with law firms or actually just familial relationships with law firms. And people are finding themselves in these networks unbeknownst to them in the true nature of the relationships. So it's important to know that that's actually happening today, where someone is innocently finding themselves in this network and participating in a way that is fraudulent or creating kind of soft fraud that does actually cost the system. Then with that, the jump to hard fraud is only a small step. It's not a full jump. It's just a small step. Why wait for there to be actually a legitimate incident that you're then trying to exploit? Why not just actually drive that yourself? And so we do see examples where drivers, in some cases, in some of our suits, have been participating in the scheme themselves. People who are on our app perpetrating the fraud. But we've also seen through this coverage that we've spoken about, UIM, incidents where we believe that there are individuals who are taking an Uber ride. The driver is not part of the actual scheme itself, and a van is involved and it hits the Uber and it runs off. And so there's no insurance in play. And all of a sudden, the three people in the car are able to make certain claims of what injuries they've sustained, but they are themselves tied to the law firm, tied to the medical providers, the body shops, the lenders themselves. So we see the schemes across the board.
And I appreciate you kind of going into detail and backing up on that soft fraud issue, because it's a very important point to make, that the consumer is, we sometimes, as we're looking at how to talk about this, I mean, people are truly becoming victims of this and unknowingly. So you all as well, you mentioned kind of scale that Uber has, and obviously you guys are a data-driven company. Tell us a little bit about some insights from your own platform that you're using to maybe perhaps help, whether it's the insurance community or policymakers, better understand that we've got to figure this out and we've got to get more engaged in the likes of legal reform.
We're in a position quite unique because of the way that we actually pass through insurance costs to consumers, that we have a very clear vision as to where the problems are emerging from. And what we find is, like, our data is very consistent with other people's experiences that might otherwise be articulated through anecdote. And what I mean by that is, you can meet another company and you can very quickly, in a matter of minutes, anticipate where they would say they have problems in terms of first state, then county level, then potentially as specific as law firm and medical providers. That it is kind of well known where the problems are arising. What we're able to bring to bear is we have a very sophisticated SIU and claims division. And so we're able to actually look at the volume of things that are happening on our platform and really dig in and uncover some of the patterns. I'd say as a bit of an analogy to this, if Uber has its own garden, we can see the weeds above the surface, and we have a bit of an ability, an increasingly better ability to get in under the roots. I think what we've found by some of our activity in the space that has been quite encouraging is that it's been a bit of a calling card, us getting more aggressive on litigation and on storytelling and being public about where we see the abuse, in that we have started to receive inbound. This inbound is from other actors, other corporations that are seeing the abuse. Sometimes it's actually from cities and counties that are also victims of increased litigation costs. We're seeing this in particular in Southern California and in New York. And what you find is that some of the people that are taking advantage of Uber are the same ones that are actually also doing slip and fall claims, also doing mass tort suits against cities and counties, and that they're not picky in terms of who they're going after. They're going wherever the opportunity itself presents.
Adam, listen, this has been very insightful. I always give our guests a chance to ask me a question. So what do you have today?
Yeah, so Sean, I know that Triplel-I has just extensive data and has done a lot of studies in this area, but I'm wondering, with insurance being top of mind for folk, what are you guys seeing as the top drivers of costs for the insurance industry, and what explains those trends?
Yeah, we are very focused on trying to kind of quantify the problem using data. In fact, later this year, we will be putting out a study based on real data from the insurance carriers on bodily injury claims and litigation. And what we see from these studies, though, is that states that have had or have high levels of legal system abuse have the highest insurance costs, and which is now, this isn't a coincidence, you're actually seeing some of these states take that head on and pass legal reform. The other impact that we see through our data, we do quarterly economic and underwriting reports, and we look at all the lines of business and insurance and the loss ratios. And when you look at the loss ratios for commercial as well as personal insurance, you're generally seeing a substantial difference in terms of the marginal difference between physical damage and liability damage. In fact, in our latest report, both commercial and personal auto insurance, it was a 20% marginal difference in terms of liability damage being higher than physical damage. Why is liability damage higher? Because that's where the litigation goes. The interesting part about our study that we realized, we added it all up, state and federal filings and settlements, it's about $43 billion total. That's a drop in the bucket to the reality of the problem, though, because only about 7%, less than 10% of those actually had judgments. And that means the others were settled, and we can't necessarily track the settlement data. So again, that's just a drop in the bucket of the cost of this problem. But those are the ways that we're trying to use data to quantify the problem and help communicate to others that legal system abuse increases insurance costs. Adam, thank you very much. This is a longer executive stage than we used to, but this is a very important issue, and Uber's perspective will be, I'm sure, most appreciated by our audience. So thank you for your time today.
I was honored to be here.